Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, February the 24th. The year's 2021. Let's talk trading, tactical exits. Just remember, these videos for educational purposes only. Your results may differ from mine. Tactical exits. We talked about tactical entries yesterday, and then as I was doing the video, I made mention that, there's usually a lot more choices for exits than there are for entries. So on the exit side, I mean, if you think about it, you're either exiting for a loss or you're going to exit for a profit. Now, some people have problems, taking that loss, but hey, it's just part of the game, part of the trading game. So I've shown this screen many times, hundreds of times most likely, that you shouldn't lose any more in any single trade than you're willing to lose. So that's on the downside. That's your risk management. So you set up your position size and your stop. So if you get stopped out, you don't lose more than you're willing to lose. Now, you don't have to lose that much. If you see a trade going against you and it just don't look right, just get out. So maybe if your stop loss is 10 pips and you're down 3 or 4, it just doesn't seem right, just punch out. And you can it's easier to make up 3 or 4 pips than it is 10. That's just how it is. On the other side, the exits, it's we're talking about the money management then. Okay? But what happens is lots of times you're managing your brain. You're not really managing the money, because if you were just managing the money, then none of this stuff would happen. Because if you're in a trade and let's say you're up 5 pips and then all of a sudden it moves against you, you're up 4 pips. Well, you probably want that pip back. And so what'll happen is you wait, you want that pip back, and now you're only up 3 pips, and it just spirals downward from there. In fact, some traders have mentioned that they've been up 3, 4, 5 pips, and then they wind up getting stopped out because they didn't take the money when they had the opportunity. Usually what happens to me is I might get like half a pip or something, and then it reverses. So that's happened to me sometimes. So that's why I have one of my rules is when I have that 3-level ZZ semaphore on and a 1 ball appears and the price stops and I'm up, I just get out. Sometimes price will zoom on in my direction and sometimes it doesn't. So the thing is we have selective memory. We remember the times that we didn't get that home run, that it's like, oh man, I left 10 pips on the table. I've said that many a time. But what we don't remember is, oh man, I'm so glad because that sucker tanked right after I exited. So that's just the way our memory works, the way we fool ourselves. So once again, when you're in the trade, a lot of times you're not really doing the money management, you're doing the brain management. So you got to put all this stuff aside. Okay, so in other words, you don't want to react to the market. Not that internal mental stuff, okay? Because you see, when you're all upset, that pain's not the market. That's your reaction to what the market's doing. The market's just doing what it does. Now, on the money management side, rule, take profit before the market takes it back. Now, there's a couple strategies here. You can take half off the table or some percent off the table and move your stop to break even. You can move your stop to break even +1 after you're up 5 more pips. You can ratchet it up. You can trailing stop. As I said, there's a lot of ways to manage the money. Or you could purely look at the chart pattern, the candlestick patterns, the bar patterns, the whatever geometric symbols or squiggly lines you put on there that tells you need to get out because this trade is over. And a lot of times what will happen is you'll kind of make a mix of it. Maybe you have a little money management. Maybe you have some brain management in there. Maybe you've got some chart patterns. So what I would suggest you do is you simplify. Because if you simplify, then you can measure. So if you only do one of the 3, then after a certain period of time, you can go, okay, how much profit did I make versus, did I leave some on the table? Was I happy? Then after a while, you could switch to another one, and then you see. And so you're constantly testing and refining and getting better at this game called trading, because that's what we want to do. Is every day we want to be a little bit better than the day before, not just in our profit column, but as actual traders. You might want to learn something new, um, do some homework, and but not, when I say learn something new, it's not necessarily another indicator to plop on your chart, but you might learn a little bit more about the strategy or the tactic or your mind, and you can understand why you do what you do when you do it and how you do it, because that will help you in the long run. So let's see. Where's the here's the wall mall chart here. And so this hour, you can see it looks like it came down and barely touched 10, but it didn't break it. It got to 10.3, so there was no trade there. But on the upside, we looks like we hit 24. So there was 3 or 4 pips to grab if you went long at 41.20. And price isn't near anything according to my indicator there. So if we drill down here to the M1, we can see just a few minutes ago, price came up, it touched the line, it pulled back, second touch, boom, through, and you could take some pips off the table there. And I mentioned, for the entries, you want to have something simple, ready, a set, and a go. Well, maybe for the exits, it's not going to be in a ready, set, go. What you're going to look for is a reason to exit. So if you're on M1 here, you might say, hey, well, price put in a 3-ball, candle turned, bearish on me. I might as well get out. So you might have had maybe 2-3 pip profit if you did that. And then as you can see, price is going back. But if you got out and then you come back later and price is up here, it's like, you know what? That wasn't your trade. You did what you were supposed to do. And what you need, along with the exit strategy and the money management side, is maybe you need some daily goals. Pips in the bank, dollars in the bank. And then when you hit it, as James Brown would say, hit it and quit. Because what's the worst thing that can happen? You start giving it back on the next trade or trades. That's the worst thing that can happen. Best thing that can happen is maybe you hit that, you hit that Magilla trade. But you don't know. So the thing is, you don't have to trade. You've made your daily goal and you quit. I mean, if you think about it, in other professions, and some people say trading is a profession, you do the job and then you stop. Well, see, the thing about trading is the job ever done? Well, it is if you set that goal, you set those limits. Hey, I want to make X dollars today. You make the X dollars, you wrap it up, and you come back tomorrow. It's yabba dabba do time, right? But many, many, many traders, oh no, they'll sit there and they'll keep doing it, Hey, if you're on a hot streak, sure, sometimes you keep going. And one of the things I mentioned, I believe before, is if you're on a hot streak, what you do is you do sudden death overtime. And that means you keep trading until you have a losing trade, then you're done. So, if you, once again, if you're on that hot streak and you're just making pips, and you're past your daily goal, as soon as you have that first losing trade, you're done. That's why, professional trading firms and prop firms, they have their risk managers in the other room, and they'll just cut you off. So, especially on the loss side, because they're managing their whole portfolio, they're managing their bank. They can't afford for some renegade trader to bring them down. So that's pretty much it on the exits. So let me know if you have any questions. I didn't really see any on the entries, but a couple people, put some kind words out there on the social networks. I appreciate that. Once again, simple trade here, simple exit, simple entry, and the exit, you just have to manage it. Let's see. And here on the order blocks, I've got the multiple order blocks. You see price left it, came back and left it again. And there was pips to be made right there. And let's just go through the other charts here. Okay, the wick zones on the monthly, you can see here price shot out of that previous month's high. Looking at the weekly, all the gaps filled. I think we said that yesterday or possibly the day before. You can see we broke above that weekly high. Now here's today. We came into the opening range for the week, Monday's range. We touched just inside and then we went back up, and it's by 36 pips at the moment. Not a bad trade. As you can see here, price shot up to the yearly high but pulled back 117 pips today. Great range today, that's for sure. No inside bar trade. There was a few on some of the other pairs today for the daily, weekly, monthly. Range, lots of range today. 157 for the pound. You can see right now we're just 5 pips over that daily previous day's high. I don't know if price is going to go back or if it's going to roll over. Okay, we took out the pivot. The pivot was close to the short zone, sell zone here, but you notice price just took off yesterday. I'm not sure why this happened. If anybody knows if there's some reason why this happened, if there was news or something. But the thing about the market is I don't really like knowing the news because it could then bias me. But, I'll come back the next day or week and say, hey, anybody know why that happened? Because I don't, it's good news, so it should go this, but then it goes that, and then I wind up on the wrong side of the trade. So I don't like to be influenced by the news. No, I want to react to what the market's doing here on the charts. Green rats, you could be feasting. There's a couple of times that the green rats feasted. The red rats, I was watching this when it happened and I was kicking myself for not being short somewhere up here because it definitely dropped nicely. In fact, I was on the phone with Walmart yesterday afternoon because he got in when it popped, I think right here. And I wasn't watching it, so I went in, looked at it, and the next thing we know, it shot up. Oh, those of you are asking, Walmart's been kind of busy this week, so that's why he hasn't been on the videos with me. Okay, so once again, we took out the pivot, weekly pivot, 3956. And once again, we took out the daily, but we missed 3 days ago. We missed 1 day ago, missed pivots there. And we've only got 2 more trading days this month. That's going to be interesting, looking at 4 missed pivots this month. In and out of the wick zone. And once again, on the trading screen, you can see here the Walmart lines. And just the 1 hour chart, real simple, Walmart lines. Order block trades. And what is this mess? Oh, some new stuff I was working on for a fellow trader. There's the potential order block. You can see price moved into it. You see it hit a high, came down, set up this potential order block, and prices moved out of it. So that's about it, fellow traders. So remember, on the exit side, once again, you want to keep it simple. Keep good notes about why you exit, and decide if you're going to exit because of the money or if you're going to exit because of what you see on the chart. Make that decision before you get in the trade, not after. That way you'll make sure you don't kick yourself for not taking the money when you had the chance. So always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.